The stock market is in freefall following President Trump's latest tariff announcement, made on none other than Liberation Day. Take a look at this S&P 500 heat map from the past week. It's a sea of red. Apple and Nvidia are both down 15%, Meta has plunged 16%, Amazon is off by 14%, and even giants like Microsoft and Google have taken hits, down 7 and 9%. So the big question is, what happens next? And more importantly, what should we do from here? Let's break it all down. Alright, first things first, don't panic and definitely don't rush to sell your existing shares. That's the number one mistake new or retail investors tend to make during a market sell-off. The longer you stay invested, the more likely you are to increase your chances of recovering and having strong gains. Here's a quick example. If you invested $10,000 in the S&P 500 from 2003 to 2022, you'd see solid growth, but miss just a few of the best days and your returns drop significantly. That's why staying invested is key. Timing the market is risky, but time in the market pays off. Secondly, think of this as an opportunity. Prices are down, and that means discounts. This is the perfect time to look at your existing positions and consider increasing your share count. Now, I'm not saying dump all your cash in at once. The smart move here is to be strategic. Start buying in systematically, whether it's every few days or once a week. This approach is called dollar cost averaging, and it's a proven way to lower the average cost of your investments over time. That way, when the market rebounds, and it always does, your portfolio won't just recover, it could surge. Take a look at this example for a moment. Say that instead of using dollar cost averaging, $500 was spent at one time in pay period 4. You would pay $11 per share. That would have resulted in a purchase of 45.45 shares, which is the 500 divided by the $11 a share. Now, there was no way for you to know the best time to buy. By using dollar cost averaging, you were able to take advantage of several price drops despite the fact that the share price increased to over $11. You ended up with more shares at a lower average price of $10.48 a share, and the number of shares was 47.71 compared to the 45.45 used in the lump sum. Now, you can't predict the perfect time to buy, but dollar cost averaging helps you stay consistent and benefit from market swings, something that we're gonna see in the next few weeks and months. Lastly, focus on business fundamentals when evaluating which stocks to buy. Warren Buffett has a simple test for a market downturn. Does a 30% drop in share price change how many Cokes people will drink next year? Does it affect how many people will use their American Express cards? If the answer is no, then the intrinsic value remains intact despite the market's temporary opinion. A classic example of this mindset is Berkshire Hathaway's investment in the Washington Post. Back in 1973, during a brutal market downturn, Warren Buffett bought shares at just 25% of what he believed was the company's true value. The stock price dropped even further after he invested, but Buffett didn't flinch. Why? Because he understood the business itself was still strong, even if the market couldn't see it. And the patience paid off. Berkshire's $10.6 million investment grew to over $200 million by 1985, a staggering return of nearly 1900%. This wasn't luck or timing, it was Buffett doing what he always does best: staying calm, focusing on fundamentals, and recognizing that fearful markets often misprice great businesses. As he famously said, "Be fearful when others are greedy and greedy when others are fearful." So when the market's panicking and quality stocks are on sale, that's your opportunity, not your signal to run. Focus on what the business is really worth, not just what the market says today. Because in the long run, it's the fundamentals, not the fear, that win. Thanks again for watching. I hope these tips help you navigate the current economic uncertainty with a little more clarity and confidence. If you found this video helpful, drop a like, subscribe to the channel, and let me know in the comments below what stocks you're looking to buy during this dip. And as always, I'll see you in the next one.